Okay, let's get started. Just wanted to point out a couple of things. Uh, Actually, more than a couple of things that used to get me in trouble trading. And basically, I would be caught on the wrong side of the market, what we call trap trader sometimes. But if you just take your time and read the price action, which I used to think was pretty impossible, but now I live by it. You can actually avoid some of the pitfalls that used to really get me tangled up. So the first thing I want to point out is that we don't want to trade with the news. We do not want to trade the news release. So if you look here, take for example the PPI candle on Thursday, that 8:30 candle. You don't want to be trying to trade with that right there. This is the CPI candle. This candle right here that pushed down. You don't want to. You don't want to try to trade with that right there. So what'll happen is the CPI, the news comes out, whether it's negative, positive, or whatever, but the market reacts to it, and then we get this big drop. That's the 8:30 candle when the news release came out, and then you see we went even lower. This is previous close. This price level right here. This is the previous close. So as you can see now, the market is going lower, or what appears to be going lower, because the bigger money is pushing this price down, getting everybody trapped under this previous close level right here. And then they quickly reverse the market. So anybody that got in this area right here may have already moved their stops to break even. But regardless, right here, if you didn't have, and this is that little area right there is 140 points. So I doubt very seriously if anybody's account can withstand 140 point plus drawdown. So right there, you'll be in trouble. So best case scenario, you got stopped out break even in here. If you reacted fast enough and move your stops to break even, if you were even able to even get in the trade. So what happens is we move here, and you see that is our 9:15 candle, and then look at our 9:30 candle. Also, I want you to take note of this level. The blue line is 17,000. Notice how we have these wicks right here above our 17,000 level. These right here, wicks everywhere, 17,000 level. Okay, the 17,000 level right here. We had that area, wicks above 17,000. So they did two things. They drug everybody up, making everybody think that we were going above 17,000. They drug everybody back down this way, making everybody think we were going to come down below 17,000 and hold. Then they whipped us back up into stops here. So they got some people stops. They didn't get everybody stops. Some people may have put their stops up here. Some people may already have experience trading this type of price action right here. But the number one thing is to not be the first guy in right here. If you notice, we came out, took out these people right here that were in this area with stops, and then we plummeted. That plummet right there was 290 points, over 290 points. So all of this down, 290 points plus. The ideal entry would have been on the pullback. And I mean, you'll always hear pullback, in on the pullback, in on the pullback. But until you really understand what that really means and you really know how to read price action, like these pins here above 17,000, which is letting you know that they're done with this level right here. They're not coming back above this level today or during our session. They may come back above it today, but they're not going to do it anytime soon. And as you can see, they never came back above it. So we're out of our New York window. I like to trade 8 to 11, so I have that window marked off right there. So they never came back in our 8 to 11 window. So they eventually inched their way on back up there and consolidated on out to the close, which was here. There's 4 o'clock. Well, that's cash close, but that's not futures close. But we'll use 4 o'clock for our close, because there's nothing really going on after that. You can see up till 5 here. There's really nothing going on. I can't get it to go. There we go. It's the last candle before the close right there. So nothing in this area right here. It's just dead. Also, what you have to be careful of is when you see extended moves up or down like that, and then you get any kind of consolidation. This is what I felt like was an ascending triangle. I mean, some people might have called it something different. It's consolidation. If you take a box and just box off that area, that's one way to do it. You can look for the geometric patterns if you want to, but it's consolidation nonetheless. It's consolidating in that box. That's signaling that price is getting ready to go somewhere, whether it's dropping down lower or going up higher. As you can see, we went higher here. That right there was a 230 point move plus 230 point move up from the bottom right here. Even if you caught it from the top, which we don't want to try to just catch trades, but that was a 150 point move right there. If you would have noticed the consolidation. This would always get me in trouble, because when the price starts consolidating after a big drop, you need to take your time and try to figure out what the market is trying to tell you. It's telling you it wants to go somewhere, and it wants to go somewhere in a hurry, but what is it really trying to tell you? That's what you need to figure out. And then whatever strategy you need to apply to try to catch that move, if you wanted to. I wouldn't normally be trading outside this 8 to 11 window, but if I were, I would be paying attention to this consolidation right here to try to gauge where I think the market is going to go. And I mean, you can do two things. The only trade here for me would have been a long trade, because I'm not going to go short into lows. So you want to sell in this area, you want to buy in this area right here. So going into the next day, you can see we consolidated overnight. And at that point, settlement price now is higher than what it was, of course, that day. But we had settlement price from the weekend, from Friday, was 16,969.25. On this day, though, the settlement price was a little bit low. I think it was like 966 or something like that. 966.25, I think, to be exact. Well, at that point, we only spent a few minutes above settlement overnight. So I was already looking for the long trade at that point. But we have two problems here. We have previous close is on top of us. We have 17,000 on top of us. But yet we're consolidating under close, and we have price under settlement for the most part of the night going into the New York Open. So this is a tricky one to play, especially since we have PPI being released on Friday. So we had CPI on Thursday. We had PPI on Friday. If you notice, at 8:30, the PPI candle, it's a large bull candle. What are they doing? They're dragging people up. We've consolidated under the lows, not the lows. We've consolidated under settlement. We've consolidated under the previous close. We're consolidated under 17,000. So textbooks and other traders and everybody's going to tell you that consolidating under a level is usually a sign that they want to break higher. So they use PPI. The PPI numbers came in contradictory to what CPI numbers came in. CPI said inflation was a little bit hotter. PPI came in and said inflation had decreased a little bit. So, of course, the market is going to react, and they're going to take that PPI number as good news. They pushed us up and pulled us above 17,000 for a few minutes. And this would have been a good trade if you would have been patient enough to wait on the pullback into this area right here. And then you could have rolled that up if you could have waited on the pullback, almost to close, you'd have been to ride that up for over 60 points. So 60 points is a day. With Nasdaq, that's a full trading day. You get 60 points. You can make any amount of money you wanted to with that, depending on your account size and leverage. So, but as you can see, they quickly reversed price and took out all the bulls. Everybody who got in here, they came back and got everybody's stops. Anybody that was trailing stops through here, and I recognized this ahead of time before everything happened, and I posted this in our Telegram channel. You can join our Telegram channel for free, and I break down all this stuff pre-market every day. And I warn everybody, I warn bulls that this was going to be a trap right here. If that PPI number came in lower than expected, they were going to trap everybody up high and then come back down. And then, as some of you may know, on Fridays, they'll just range the market back and forth because there's options expiring on Friday. So they want to just get everybody. So they just chop the market out for the rest of the day. And there's nothing else you can do with this market. You might have been frustrated that you were in correctly here and got stopped out here. And then start revenge trading. And then you get chopped up all in this little area right here, which is not good. You don't want to trade in that. That's not nothing you want to trade in. It's very, very, very nasty price action. You don't want to trade in that. So to review, you need to wait for news. When news is released, you need to also know where you're at on the chart, so you're not shorting into lows or buying into highs. You need to be patient and wait on the price to come to you. Here was a perfect trade. I was in this trade. I wasn't in this trade from the top. I know traders that were in this trade from the top and they got stopped out here. If you would have waited for these pins, especially this 15-minute pin that closed right here, and we closed back below our 17,000 area right here, we closed back below that level, you would have been golden for this ride down. And then just know, when you recognize consolidation, you have a decision to make. Do I need to get out? Do I need to hold it? Here, in this case, I didn't want to hold it because I didn't want to hold this consolidation into these lows right here. Another day giveaway. I'm going to zoom out a little bit on this chart. This pin into our lows and into this 50 level right here. Let you know that the bulls are back in control. And they took it up into our consolidation for the rest of the day. A couple more things before we wrap up. I just want to bring to your attention these highs right here that we made on this day. If you notice, and once you understand the concept of trap traders, these bulls are trapped up here. Now, try that a little bit better. These guys are trapped up here now. So that means anybody in this area, and more than likely anybody from way down here that got in the trade early, if they actually survived when they got up here, they quickly got erased with that bearish engulfing. Then they got tricked into maybe holding on because the next candle started out being going bullish and pushing back above 17,000. So these guys probably really wanted to stay in and just underestimated what was going to happen, especially if they're not experienced in trading NQ. And you can see how it just came down, choppy price action, basically came down and took everybody out. So one thing you need to be asking yourself, and I know a lot of people don't like looking left on their charts. They only think what happens when price is developing matters. But if you go back here again and you look, you can see these London highs right here overnight before CPI. And we're not going to talk about this too much. We had 100% price settlement. Traders were 100% below settlement that day. And we'll make another video on settlement and what that means and everything. But basically, We pushed up higher. We broke London's highs. We pinned London's highs and refused to close up there. The news drove us lower. Pay attention to what's going on now. News drove us lower on bad CPI numbers. We had bad CPI numbers, and price now started going lower, but it was a trap. Same thing over here. CPI, PPI numbers were good, and price moved up. Trap buyers came down. So here's my point. If you see these two pins right here, pin above 17,000 and fall. You see how big that fall was right there? Like I said, this entire move was a 290 point move. If you could have caught this in the top area of those pins right there, at least it would have at least been a 275 point move. But you could easily got 100 plus points out of this move coming down right here. What that tells me coming into New York Open after the PPI release is that if the market, if the institutional guys and if the big traders and if the market just generally didn't want this to stay and they pinned this 17,000 level as hard as they did up here, if they did that and they didn't let price go higher right here, what makes you think a weaker news release is going to actually do and push it up higher? Why would you think we would defeat those pins? They already signaled their intention to not let price go back above 17,000 right here. So that's just something else I wanted to bring to everybody's attention. And yes, we'll be doing more videos on price action and all these things that we're looking at. But right now, I just wanted to show you a couple of things that I used to get caught up in. And now I don't get caught up in them no more unless I don't pay attention. If I'm not paying attention or I'm not on my A game, I'm not coming to the markets and I haven't done my homework. If you do your homework, you won't get caught up in these type of things, and you can watch them unfold and understand what's happening based on what has already happened and based on what you see happening. Thanks for watching, everybody. We'll talk to you later.